This video is a review of Inpex's fiscal year 2024 full-year financial results, period from January 2024 to December 2024. Inpex Corporation is Japan's largest oil and gas exploration and production company. It operates globally across more than 20 countries, engaging in the research, exploration, development, production, and sales of oil, natural gas, and other mineral resources. Highlights of the consolidated financial results for fiscal year 2024. Inpex reported strong financial results for fiscal year 2024, with both revenue and profits increasing compared to the previous year. Revenue surpassed 2.2 trillion yen, and operating profit exceeded 1.2 trillion yen, while net profit reached 427.3 billion yen, over 100 billion yen higher year-on-year, marking the second highest results in the company's history after FY2022. Despite setbacks like production issues at the IPXHY LNG, liquefied natural gas project, and the write-off of a capitalized exploration project in Australia, the company offset these with a weaker yen and strategic tax management. While oil prices dipped slightly to around $80 per barrel, the yen depreciated to about 152 yen per US dollar, which improved earnings. Key performance indicators were also solid. ROIC, return on invested capital, stood at 8.4%. ROE, return on equity, was 9.5%, and the net debt-to-equity ratio was a conservative 0.33, showing financial strength. Revenue by major products. Inpex's crude oil revenue reached 1,712 billion yen, up about 100 billion yen from the previous year's 1,600 billion yen, despite only a slight increase in sales volume. Although unit prices declined due to lower Brent oil prices, the weaker yen boosted revenue. Natural gas revenue was 525.1 billion yen, roughly the same as last year. While unit prices also fell, and there was a production issue at the IPXHY LNG project, strong performance at the Prelude facility helped offset the impact, and the favorable exchange rate supported stable revenue. Analysis of results of profit attributable to owners of parent. Net profit rose by 105.6 billion yen from 321.7 billion yen in fiscal year 2023 to 427.3 billion yen in fiscal year 2024. This increase was driven by both regular business activities and other contributing factors. Inpex reclassified income tax expense as part of business activities, and this category added 14.6 billion yen to the profit. Among the other factors, a major boost came from the recovery of the Prelude project, which had recorded a large impairment loss in fiscal year 2023 due to greenhouse gas regulations. Additionally, Inpex gained about 17 billion yen from selling a Middle Eastern project and a geothermal project in Indonesia, while revenue increased by over 100 billion yen, mainly due to favorable exchange rates. Sales volume was largely unchanged, and unit prices declined. Costs also rose, particularly from higher depreciation and royalties linked to increased crude oil sales. Profit was reduced by 27 billion yen due to the write-off of an exploration project in Australia, and R&D spending on hydrogen and CCS lowered profits by another 38.7 billion yen, as these costs couldn't be capitalized. The performance of IPXHY JV, reflected through the equity method, was somewhat impacted by production issues. Meanwhile, income tax expense provided a significant positive impact of 41.5 billion yen, thanks to a group restructuring that transferred ownership of the Prelude operator from a Japanese to an Australian company, allowing Inpex to use tax losses more effectively. All combined, these elements contributed to the substantial year-on-year profit increase in fiscal year 2024. Highlights of the consolidated financial forecasts for fiscal year 2025. Inpex's initial budget for fiscal year 2025 projects net profit at 330 billion yen, which is about 100 billion yen lower than the previous year, but still considered strong, matching the initial forecast for fiscal year 2024 and ranking as the third highest in company history. If achieved, this would mark the fourth consecutive year with profits exceeding 300 billion yen, reflecting a steady increase in the company's profit scale. The budget assumes an average oil price of $75 per barrel, slightly down from earlier in the year, and an exchange rate of 153 yen to the US dollar. Based on these assumptions, Inpex expects ROIC, return on invested capital, of 6.3%, which is above its WACC, weighted average cost of capital, indicating solid investment efficiency. However, ROE, return on equity, is estimated at around 7%, which is below the company's target due to the large equity base of about 4.8 trillion yen, including 1 trillion yen in foreign currency translation adjustments, making it harder to exceed the cost of equity. Strengthening shareholder returns. Inpex's approach to shareholder returns combines dividends with share buybacks in a balanced way. Starting with the current midterm business plan, the company has introduced a progressive dividend policy, setting a base dividend of 90 yen per share annually. For fiscal year 2024, the dividend was 86 yen per share, and it will increase to 90 yen per share in fiscal year 2025, establishing this level as a minimum going forward to strengthen returns to shareholders. Inpex is aiming for a total payout ratio of over 50% during the 3-year plan, up from the previous plan's target of over 40%. In fact, in some years under the last plan, the payout exceeded 40%, and Inpex is aiming to exceed 50% this time as well. Looking beyond this period, Inpex acknowledges that large investments, such as the IPXHY LNG expansion and Abadi LNG projects, are expected between 2028 and 2030. The current 2025 to 2027 phase is seen as a preparation period involving front-end engineering design and potentially final investment decisions. Even with those large-scale future investments, Inpex plans to keep its debt-to-equity ratio between 0.3 and 0.5. While borrowing may be necessary, the company is confident it can manage debt responsibly while continuing to provide solid shareholder returns and support future growth. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 1,858 yen as of April 18th, and the US dollar stock price is $12.81 as of April 17th. Current PBR is 0.46 and PER is 6.7. Dividend yield is 4.84%. Compared to the last few years, PBR is about the same figure as before, but PER is higher. And dividend yield shows that current stock price is relatively lower. In the past, Inpex's stock price dropped sharply due to the impact of COVID-19, making it relatively cheaper at that time. More recently, the stock price has also declined due to the effects of tariffs imposed during the Trump administration, which has again made the stock appear cheaper. Inpex's stock price is highly volatile because it is strongly affected by fluctuations in global oil market prices, and future stock price is partly dependent on it. Conclusion. Inpex is heavily influenced by market conditions, so its future stock price is expected to fluctuate depending on the economy. Due to the impact of the Trump tariffs, the stock is currently at a low price level. However, as Japan's leading oil company, it remains a popular high-dividend stock, especially among individual investors.